two key things. Number one, every single time the Federal Reserve creates new money, the value, the purchasing power value, which is the real trend. This is what we're really talking about. I've been talking about it for years. This is the one that matters to you. But what they're doing is they're hiding the real trend, which is negative, and that's in purchasing power. You can have $5 gazillion, but if you can't buy a loaf of bread with them, what good do they do you? They're just digits. The trust of the American people is essential for the Federal Reserve to effectively carry out our important mission. I am so annoyed with this, I can't even tell. I'm so pissed off. This review will assist in identifying ways to further tighten. Further tighten? How about tighten? Those rules and standards. The board will make changes as appropriate. Oh, that's all garbage. Okay? Because of the code of conduct. But the real big kicker in here is because the trust of the American people is essential. The trust of the American people is essential for them to continue to you. Don't bend over. That's all I can say. Don't bend over. And I'm sorry, I don't want to offend anybody. But let me show you the waivers that makes this kind of behavior legal. Because it's not just at the Fed. It's also at the Congress. This is from the New York Fed. Here's the waiver. Section 208. Pursuant to this of Title 18, blah, blah, blah. These waivers are issued by the president or first vice president. These waivers allow an employee, hence the federal presidents, regional presidents, to work on a particular matter even though the employee has a financial interest that might be affected by the matter because the employee's participation is critically important to the bank and the financial interest is not so significant that it would compromise the employee's judgment. I mean, think about this. If you're sitting in stocks and bonds and then you're determined, and the market's imploding, whose best interest is it in to prop this market up? Don't we have a K-shaped recovery where we've got those at the top that are doing enormously well and those at the bottom that are suffering even more? So has this been a broad-based recovery? No, it has not. But those at the top that are in the stock market, yeah, it's been a pretty good recovery for them. And it covers Congress too. I mean, come on, 4 U.S. senators sold stock after getting coronavirus threat briefings in January. You think they might have known something that you didn't know? And do you think they might have acted on their best interest, putting their best interest first? Did they come out and say, you know, you might want to sell your stocks and bonds? Heck no, they're not going to say that to you. And they're not going to do it for themselves. This growing conflict, it's growing, understand, it's growing. Conflict of interest problem is in the U.S. Congress too. Now, these are our elected officials. Personally, I think anybody that's really going to make a decision about the markets and about the economy shouldn't own any of these assets, these fiat money assets. Because that's the only way their choices can be clean. It's the only way. And hey, if the dollar is so great, hold them in dollars while you're a part of the government. Why not? Congress people in both political parties have substantial holdings in firms their legislative actions affect. And this number has grown substantially in recent years. While roughly 20% of lawmakers owned stock in 2001, that number had more than doubled by 2013. As of the most recent data, I think it's quite interesting that they don't have really current data, but the most current, 2014 from the Senate and 2016 from the House, and we are in what year? 2021? I think that's quite interesting and quite telling. What are you hiding? Over half of Congress owns stocks, many with holdings in excess of $100,000 in stocks alone, not to mention mutual funds and other forms of investments. In addition, as of 2014, I'm pretty sure this is higher now, over half of lawmakers were millionaires. How nice is that? Are they going to protect their interests? Or are they really looking to protect your interest? You trust these guys? I'm sorry. I wish I was so naive to be able to trust it, but I do too much research. I look at too many things. And if you think it's just there, well, look at how the revolving door spins from FDA to the industry. And that's a lot of them. We used to talk about the revolving door, Goldman Sachs to the government, to the Treasury, etc. This is not new stuff, but this is really why you need to become your own central banker, because you're required. I mean, look, you do whatever you want, but you are not too big to fail. They are too big to fail. And we're talking about the banks, right? Well, we're talking about our government officials, and we're talking about private bank, the Fed officials, and it goes higher still. You know, the gold and silver are being manipulated, but they can do that forever, can't they? It's been tried, and there are over 4,800 times, and you know, now I think I read something briefly this morning, I'm gonna look at it more later, about Argentina. So Brazil, Argentina, Venezuela, Zimbabwe, Turkey, you know, on and on and on the list goes. But at some point in here, I recognize it's already happening to the dollar. At some point in here, you too will recognize that it is happening. What I don't want is I do not want you to be like a deer caught in the headlights, so that's what happens to you. Because that's not okay with me. That's why I work so hard at all of this. Do yourself a favor. Get your insurance. Get it in place. You need more than gold and silver to weather this economic storm that we got a little taste of in 2020. You also need food, water, energy, security, community, and shelter, as well as barterability, and wealth preservation.